Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
In today's market, where technology is evolving faster than ever, and global innovation is reshaping entire industries, two companies are standing out in ways most investors aren't even paying attention to yet. Whether you're watching the rise of next-generation biotech tools or the explosive demand for ultra-fast AI data connectivity, these two stocks are quietly positioning themselves at the center of billion-dollar trends, and the numbers behind their latest moves are too compelling to ignore. What makes these companies so interesting right now? Is it their breakthrough technologies, their expanding global footprint, or the financial signals showing exactly where their industries may be heading next? Today, we're breaking down two stocks to watch closely. Imagine two companies worlds apart, both on the cutting edge of innovation, quietly shaping the future of their industries. One is a biotech firm helping scientists decode the mysteries of the human cell. The other is a technology company pushing the limits of AI data centers with ultra-fast optical engines. Sounds exciting, right? But here's the twist. One is established and growing steadily, while the other is still in its infancy, burning cash but chasing a potentially massive market. We'll break down their industries, analyze their latest financials figure by figure, compare their strategies, discuss risks, and explore what these numbers really mean. By the end, you'll understand why these two stocks are on the radar of investors worldwide. This video is for informational and educational purposes only. It is not financial advice, and I'm not a financial advisor. Always do your own research before making investment decisions. All data and insights discussed here were sourced from publicly available information, including the company's official websites, press releases, and investor reports, as well as reliable financial sources. Not a buy recommendation. Before we dive in, please take a second to hit the like button, share it with your friends, and also subscribe. Please help this video to get at least 500 likes. It really helps support the channel and keeps us bringing you the latest market insight. Thank you. First up is Cytek Biosciences with a ticker symbol CTKB. This company operates in biotechnology, specifically in cell analysis technology. If you've ever wondered how researchers study individual cells to develop new drugs or therapies, Cytek is right there. Their flagship product, the Cytek Muse Microcell Analyzer, recently won the Biotech Breakthrough Award for Drug Discovery Solution of the Year, a strong nod to their innovation. Cytek is based in the US, but they're not limiting themselves to one market. A new facility in Amsterdam signals their European expansion, giving them access to new customers and growth opportunities. So, we have a biotech innovator helping scientists make breakthroughs, and an AI hardware specialist reshaping data centers. Let's look at Cytek's recent performance. Their Q3 2025 revenue was $50.3 million, up 2% year-over-year. That's modest growth, but it's steady. Revenue rose in the US, APAC, and other global regions. Though Europe remained soft, digging deeper, gross profit fell 5% to $27.6 million, with gross margins dropping from 56% to 53%. adjusted for stock-based compensation and acquisition-related amortization, the margin is 55%, down from 60% last year. What does this tell us? In my view, costs are creeping up faster than revenue, which can pressure profitability if trends continue. Operating expenses were $36.7 million, a 10% increase year-over-year. Let's break it down. Research and development was $9 million, down 9%. Sales and marketing was $11.7 million, down 6%. General and administrative was $16.1 million, up 47%, largely due to litigation and one-time charges. Loss from operations was $9.2 million compared to $4.2 million last year, and net loss was $5.5 million versus net income of $0.9 million. But here's a bright spot. Cash and marketable securities remained strong at $261.7 million, essentially flat from last quarter. This gives Cytek breathing room to continue expansion, invest in innovation, and navigate temporary challenges. They reaffirmed their full-year 2025 revenue guidance of $196 million to $205 million, representing growth of -2% to +2%. So the story here is stability, innovation, and careful expansion. But profitability pressures and soft EMEA demand are cautionary flags. If you're enjoying these market insights and finding them helpful, please take a moment to like this video and share it with your friends. Thank you. Switching gears to POET Technologies, ticker POET. This company is chasing the future of AI connectivity. Their optical engines simplify high-speed data transfer. And in a world dominated by AI, that's a critical bottleneck they're solving. This company is in the optical interconnect and AI hardware industry. Based in Canada, their technology enables data centers to handle massive amounts of data. We're talking 800 gigabytes to 1.6 terabit speeds, essential for next-gen AI applications. They've partnered with companies like Foxconn and SEC, which validates their technology and opens doors to massive scale. Let us take a quick look at some major updates from POET Technologies, because these developments show how fast the company is moving in the AI hardware and optical connectivity space. First, POET announced the closing of a $150 million oversubscribed registered direct offering. What does that mean in simple English? It means investors were willing to buy more shares than POET originally planned to sell. That's usually a sign of strong interest or confidence in the company's long-term technology. And raising $150 million gives POET more cash to continue developing its optical interposer platform, expand production, and strengthen its balance sheet. The company also closed a $75 million investment aimed at accelerating growth in its AI connectivity solutions. This money is focused specifically on helping POET speed up development and move closer to commercialization. For a company trying to supply high-speed optical engines to big data centers and AI networks, having this kind of financial backing is critical. It gives POET enough runway to invest in engineering, partnerships, and scaling its technology. On October 22, 2025, Poet received a $5 million production order for its 800G optical engines. This is an important milestone because it is not just testing or prototyping. This is an actual production-level order. It means a customer believes in the product enough to commit real money and begin using Poet's technology in their systems. They've also achieved industry recognition, winning the Most Innovative Award at ECOC 2025 and launching 1.6 Tbps optical receivers with SEC. These milestones are critical for credibility in the tech ecosystem. For a developing tech company, production orders often signal the transition from research mode to revenue-generating mode. Put together, these updates tell a very clear story. Poet is securing major funding, building commercial momentum, and now receiving real-world orders for high-speed optical engines used in AI data centers. Funding shows confidence. Investment accelerates their roadmap, and a production order confirms demand. In short, these moves show a company preparing to scale, and one that industry players are starting to take more seriously as AI continues to grow. For the 3 months ending June 30th, 2025, revenue was $168,000, up from zero last quarter. Net loss was $17.6 million, up from $7.98 million. Operating expenses were $9.3 million, up from $6.75 million. Basic loss per share was 0.1, up from 0.14. Clearly, Poet is burning cash. But this is typical for a high-growth early-stage tech company. What's crucial here is the market opportunity. The optical interconnect market could grow to $26 to $35 billion by 2030. Add in their recent funding, the $150 million oversubscribed raise in October 2025, plus a $75 million earlier investment, and this secures liquidity through 2026, allowing them to aggressively develop AI connectivity solutions. They've also achieved industry recognition, winning the Most Innovative Award at ECOC 2025 and launching 1.6 Tbps optical receivers. With SEC, critical milestones for credibility in the tech ecosystem. So, Poet represents high-risk, high-reward innovation. Early-stage revenue is minimal, but if their technology captures a meaningful share of the multi-billion-dollar AI connectivity market, the upside could be significant. To very different paths, to very different risk profiles. If you're enjoying these market insights and finding them helpful, please take a moment to like this video and share it with your friends. Thank you. So, we have a biotech innovator helping scientists make breakthroughs and an AI hardware specialist raise Haping data centers. Let's compare the two stocks. In my opinion, Cytek has mature, steady growth, recognized products, strong cash reserves, moderate risk, but slower expansion and profitability pressure. Poet is early stage, with massive market potential, high losses, but aggressive funding, innovative technology, and strategic partnerships, which is right for an investor. That depends on your risk tolerance. Are you looking for stability with modest growth, or are you willing to bet on the potential of a high-growth AI market with near-term losses? Sometimes the most exciting opportunities come with the biggest uncertainties. How did you balance caution and ambition? To sum up, SciTech Biosciences and Poet Technologies offer fascinating case studies in innovation. One is stabilizing its global presence while the other is building the infrastructure for the AI-driven future. Both have their own story, both have risks, and both are worth watching from a learning and analytical perspective, if nothing else. Disclaimer: this video is for educational and informational purposes only. It is not financial advice, and you should always do your own research or consult a licensed financial advisor before making investment decisions. If you enjoyed this deep dive, please like, share, and subscribe for more in-depth analysis of emerging companies and global investment trends. By subscribing, you'll stay updated with professional educational insights delivered in a way that is easy to follow and engaging for investors. Thanks for watching.